Welcome to this week's Money Metals podcast, helping gold and silver investors during these turbulent times. Now, here's this week's market wrap with commentary and analysis from the low-cost precious metals dealer voted best in the U.S., Money Metals Exchange.
Welcome to this week's Market Wrap podcast. I'm Mike Gleason. Coming up, we'll hear from Frank Holmes, CEO of U.S. Global Investors. Frank reveals some very bullish fundamentals that he sees developing for the precious metals in the coming months, and also shares some information on an exciting new gold fund. Don't miss another great interview with the Mining Journal's Gold Fund Manager of the Year for 2016, Frank Holmes, coming up after this week's market update. Well, as certain United States senators were finding new ways to kneecap Obamacare repeal efforts this week, the Federal Reserve stood pat on interest rates. Janet Yellen and company left their benchmark funds rate unchanged as expected on Wednesday. Fed officials have expressed frustration in recent months that their inflation target of 2% hasn't officially been met. Consumer and producer prices have stayed relatively flat thanks in large part to low prices in key commodities such as copper and crude oil. But this week, oil prices surged 7% to just under $50 per barrel. Crude still needs to break out above the $55 level to make new highs for the year and establish an uptrend. Copper prices are also on the move. The red metal surged nearly 6% this week to hit a fresh two-year high. If the story of rising economic growth and more manufacturing jobs under Donald Trump's leadership has legs, then copper could continue to climb. However, once the economic indicators start turning down and recession fears gin up, then the preferred metal for investors to hold will be gold. Check in with the gold market. Spot prices currently come in at $1,268 an ounce, up 1% for the week. The yellow metal is now trading back above both its 50-day and 200-day moving averages. Silver is also posting a weekly advance of 1% and now trades at $16.75 an ounce. Palladium is up a healthy 4.2% to $885, while platinum is struggling once again, down 0.2% to trade at $937 an ounce. Overall, the precious metals complex is improving as we head into the more favorable months of the year seasonally. One potential headwind would be a relief rally in the U.S. dollar. The dollar may be due for a bit of a rebound near term after having fallen steadily for the past 4 months. Even so, the dollar and precious metals could benefit simultaneously from a flight to safety in the event of an equity market sell-off. The VIX Volatility Index for the stock market hit a record low this week, indicating extraordinary levels of complacency among investors. Fed Chair Yellen has been careful not to rattle the markets. She's given the Trump White House no reason to complain. Of course, when Donald Trump was a candidate for president, he railed against Yellen. He accused her of keeping rates down for political reasons and blowing up a bubble in financial markets. But now that he is president, Trump favors Yellen's easy money policies. According to new reports, Trump is even considering reappointing the big government socialist as Fed chair.
With some breaking news, President Trump telling the Wall Street Journal that Yellen remains a contender for a second term at the Federal Reserve.
If the president wants somebody who is very likely to keep interest rates as low as possible, he might want Janet Yellen.
In other words, it's nice to have the wind at your back, right? It's nice to have the Fed helping you out, as they did for President Obama for 8 years.
It doesn't matter whether the president is a Democrat or a Republican. Support for stimulative monetary policy transcends party lines. That's why Alan Greenspan, Ben Bernanke, and now possibly Janet Yellen got reappointed from one administration to another. Republicans and Democrats may spar like pro wrestlers during campaigns, but when it comes to really big issues like monetary policy and the size of government, their differences are virtually non-existent. History shows that even when Republicans get control of Congress and the White House, government spending goes up just as much as when Democrats are in charge. That's now in the process of proving itself out again. The GOP Senate is more likely to sign off on large increases in military spending than to repeal Obamacare or cut spending on domestic programs. Maybe after failing to deliver on health care and fiscal restraint, Republicans will feel enough heat from voters to deliver at least something on tax cuts. the hope of tax cuts to come is helping to keep the stock market rally going. But tax cuts or not, investors would be wise to consider the long-term consequences of unshakable bipartisan commitment to more spending and more debt. Rising debt levels will exert tremendous pressure on our already strained monetary system. Well, now, without further delay, let's get right to this week's exclusive interview. It is my privilege now to welcome in Frank Holmes, CEO and Chief Investment Officer at U.S. Global Investors. Mr. Holmes has received various honors over the years, including being named America's Best Fund Manager for 2016 by the Mining Journal. He is also the co-author of the book, The Gold Watcher, Demystifying Gold Investing, and is a regular guest on CNBC, Bloomberg, Fox Business, as well as right here on the Money Metals podcast. Frank, welcome back, and thanks for joining us again today. How are you?
Outstanding.
Well, I'm looking forward to getting into some of these questions with you today. And to start off, I know you've had a lot to say about gold here recently in following your market commentaries and your Frank talks like I do. Now, before we get into some other stuff, including the exciting new gold fund that you've just launched there at U.S. Global Investors, let's talk first about where we are in the metals right now. We saw prices heading higher earlier in the year and then correcting lower more recently. But gold has really hung in there over the last month or so and has seemed to have found strong support in the low 1200s. So what do you make of the market action here recently in the metals, Frank?
Well, I think a big factor is real interest rates and what's happening in the bond markets around the world. Debt levels are going to record highs. We saw money supply in the EU. It may jump 5% in a month. It doesn't matter. They're just printing this money. But it's stimulating their economy, and that's all they care about. And I think that you're seeing this witness of this proliferation of paper money. You're witnessing that they're manipulating real interest rates to be negative, and that is always good for gold. And you're then seeing in the U.S. that even with rising interest rates, the dollar had one of its biggest declines last quarter of over 3%. So gold is rising in U.S. dollar terms for different reasons than the rest, but it is, to me, a real positive factor. We have global growth is being ignited from Europe. It's good in Japan, and this is also good for the back end of gold. Then I think the supply side is being restricted, and this silly tax from Tanzania of over hundreds of billion dollars. It's just outrageous what these countries are doing. You see it in Latin America, and you see it in you used to hear about it in Mongolia, now it's in Africa. They want money to come into these countries. They move the goalposts. There's no fiscal stability. There's no tax regime that's disciplined for at least 10 years to attract capital. So I don't think you're going to see supply coming out on side. So I think the world anticipates supply is actually peaking. And when you look at the gold production of the mines today, you're seeing that no more capital is going to go into these high-risk countries, no fly zone. And you're seeing this continuous printing of money and negative real interest rates. It's all a great scenario for gold.
Expanding the point here on the Fed specifically, the FOMC is meeting again this week. Janet Yellen has taken a more dovish posture, but lots of people still expect another rate hike or two before year end. What are you expecting here, Frank? Is the Fed basically done in your view?
Yes, the Fed is done. And in fact, I thought it just recently came out hot on the wire today that the Fed is going to be more about getting rid of some of those bonds they own in the marketplace rather than raising interest rates now to de-risk their balance sheet. But I think that they have to be very sensitive on that. So I don't think it's really going to happen to any great degree because you would have rates rise for anyone who want to buy those bonds and the financial market itself. So I think we're in a very precarious situation. President Trump believes, that a weak dollar is good for exports, and that's what we're seeing. The exports are pretty attractive in the U.S. Anytime we have a weak dollar, it's fantastic for Boeing. Have you looked at Boeing's chart? I mean, it's a beautiful 45-degree angle. So the world is going to be buying Boeing, and it makes it more competitive against the Airbus. And I think that this is so important because they're high-paying jobs, and our export business is picking up.
And speaking of the dollar, metals should be getting some help from the weakness in the U.S. dollar. The DXY index peaked in December and has been trending lower ever since. We now sit at the lowest levels in 2 years. But metals on the whole aren't really reflecting that trend, at least not yet, or not in a meaningful way, or as much as you'd expect. What are your thoughts on why, and what do you see in store for the dollar in the months ahead?
Well, I think the big concern is the infrastructure spending. President Trump has not been able to get through many things in the Beltway, and he's up against the Beltway Party, which are all the government agencies, along with all the lobbyists. And so this is real evident from Obamacare, which they all wanted to make changes to, and they couldn't get their act together twice. The only thing I've seen where he's laid off, they fired 200 and some odd government workers in the VA department, or just terrible employees. But that seems the only agency that's taken place with. There's been no streamlining except where he's passed a law that you have to cancel two for opening one new law. But I think that maybe slows down that what was on steroids was every government agency putting through so many regulations and rules, which was stunning the economy. So I think that this infrastructure, if we get the infrastructure bills passed, and that's what we should have focused on to begin with, in my opinion, and not personal tax but corporate taxes, because they're not lightning rods for lots of negative publicity. Personal income taxes, the rich versus poor debate comes up in the media, and so that just makes it more difficult. But corporate taxes, to be globally competitive, that would have been easier to float. And I think the infrastructure spending would be easier to float. The last big boom in infrastructure spending was China with the Great Gorge Dam and other projects throughout their country, but there's nothing of significance that would be beneficial to all the metals and resources like we had from 2001 to 2007.
Another potential catalyst for higher gold prices may be the theater surrounding the hiking of the debt ceiling in Washington. Congress is going to wrestle over whether or not to raise the borrowing limit again soon. Do you think we may actually see a real fight, or will the Republican leadership manage to push the hike through without much fuss? And then as a follow-up, what kind of market reaction should we expect in gold?
I think the same conservative Republicans will be as disruptive as they were for Obamacare as they are for budget. They are very rigid, and I was at a conference and I was really pleased hearing Alex Green speak, and his comments were that the difference between Democrats and Republicans is that Republicans want to have freedom of your money and economics, but they want to control your social or personal agenda, whereas the Democrats want to have the freedom of social personal life, but they want to control your economics. And the fringes on both sides of that is what seems to be dictating or controlling the policies that are frustrating to mainstream America. I thought that was so well put.
Now, switching to gold stocks here, and before we get into your new fund, Frank, are we entering a new rally phase after having successfully held above the key $21 support level on the GDX?
Well, two things. We're in a seasonal pattern where gold starts its rally through the summer and rallies with down dips and corrections, but it's usually from here up to the Chinese New Year, succession of higher highs. But you can still get these gyrations taking place in downdrafts. So that's important to witness that I think the wind is at your back, not in your face. And two is the GDXJ at the end of March was like collectively with the triple, the Drexion, Bull and Bear, and the GDX and GDXJ, you had them all up. They were like $17 billion, or some big number, and they fell to $12 billion. So you're talking about $5 billion blown out of the gold stocks. And I think the GDXJ has been extremely disruptive to the gold stocks around the world, especially the small and mid-cap. And it's hurt financings. It's hurt confidence and sentiment. I was speaking at a conference in Vancouver, and they just couldn't understand what was going on. And I explained to them, and then the lights went off, that it was all fund flows. Now, GDX has been a wonderful success, but what's happened in the psychology of investors is they don't want to go and give to an active fund manager. And even though last year we won these awards for outperforming the GDX and GDXJ, they want to go and trade the GDX and GDXJ, and what money would normally be distributed amongst 10 different gold fund managers all went to one fund, which is then going to own 20 companies owning more than 20% of them. So that triggered all these compliance rules, so then they had to blow out $3 billion in 6 weeks. So what took a year for $5 billion to go in, $3 billion gets blown out in a very short period of time. And I don't think a lot of investors are aware that the GDX, GDXJ owns a big slug of the GDX. I think it's his biggest investor. So it's sort of like the movie Deliverance. It's hillbilly time here of cross ownership. And so the movement of these gold stocks has nothing to do with fundamental factors. It has to do with factors of just fund flows, and they have to buy a basket of names. And so that was the reason why we launched our Go AU, Go Gold, which is an intelligent set of factors based on 8,000 hours of research of seeing is with the best factors for picking gold stocks as a gold analyst, and then also doing a lot of work on the new buyers in the capital markets are quant funds, and they look for different factors. So we wanted to try to identify what do the quant funds look for when they're picking stocks, in particular the gold space. And we've been able to embed that with a set of rules that are dynamically adjusting and adapting every quarter based on the results. And when we back tested going back over 10 years, that particular index that we created outperformed the GDX, GXJ 95% of the time in rolling 12-month periods. So I think that we've tried to deal with that as a solution to a problem in the capital markets for gold investors that just want to play the ETFs.
Yeah, and doing research on that new fund in advance of this interview, I was very excited about a lot of the things I was reading in there. So the U.S. Global Go Gold and Precious Metals Miners ETF. Frank, it looks like you have kind of a big emphasis on the streamers and the royalty companies in that fund. Talk about that, and then also talk about how people can maybe get involved in that if they wish.
Sure. Well, it's listed on the New York Stock Exchange. It's simple symbol, Go Gold, Go AU. The element symbol for gold is AU. And I think that we went for the streamers because the streamers have lower volatility in revenue. And so we found the stocks that have lower volatility in their revenue and their cash flow get a better rating in the capital markets by any industry. It doesn't matter what the industry is. Other parts is that we found with the ratios was when we looked at revenue per employee, and we looked at all the gold stocks and put them all together, et cetera. And we did a test, which if you go to goauetf.com, there's information there. You go to U.S. funds, you can get the information of all the research. And what we found was that they outperform. You just take the best 10 names, but in a mutual fund or ETF has at least 21 names. It's a very important factor, is this revenue per employee. So when you look at great firms like Goldman Sachs, has over $1 million of revenue per employee, and Newmont has $300,000 of revenue per employee, and Barrick has almost $400,000 of revenue per employee. But interesting enough, Franco-Nevada, which has royalties on those two gold mining company stocks, the mines in Nevada, it has $17 million of revenue per employee. So it has a much more efficient cost of capital. And so with that, the royalty companies have outperformed the GDX and GDXJ. And the other part was the GDXJ, which really shocked us in our analysis, that in the past 4 years, they've been issuing so much stock and financings, over 100% dilution, issuing shares, but they've not grown the reserves per share or the production per share. So they've been issuing shares at a rate of 25% a year. So what does that mean to an investor? That would mean that either the price of gold goes up 25% a year, which is not, or their production rises 25% a year, which is not, or the reserves per share are rising at 25% per year, and it's not then. So those stocks are very vulnerable to downdrafts, whereas the royalty companies, when they've done a financing, immediately buy cash flow, and it shows up that they're just a safer bet. And the last thing is that the little microcap stocks, there's a good housekeeping seal when a Franco-Nevada or a Silver Wheaton or Royal Gold buys a royalty in those assets. They've sent in their metallurgists, their engineers, their geologists, their whole sort of intellectual brain trust to go and vet those assets. And it's like a good housekeeping seal. And for us, it was a way to play a lot of the small caps that they were vetted by those three royalty companies.
Yeah, very exciting. There's certainly some flaws in those other indexes, and I think yours is going to be a great one for people to take part in if they want to get exposure to that space. Real quick follow-up. In your view, do we see the miners lead the bullion or the bullion lead the miners? What's your thought there?
I think the miners are going to lead. I think that those companies in particular that can show growth in revenue per share, production per share, cash flow per share, rising price to book, they're going to be the stellar performance. But I think the reason for that is that the supply of gold coming out of the mines is going to continue to become more scarce. And shrinking supply has always been a catalyst for higher commodity price. and the runaway printing of money, I think that's going to be just a factor of the continued consumption of gold by China, India. We also see the Russians are continuing to be buyers of gold because they're witnessing the currency devaluation with this money printing globally. So I think that's going to be a key factor. And then when you look at these cryptocurrencies, to me they're so fascinating, not so much about them taking off, which particular a couple of them have in particular, Ethereum and Bitcoin. The Bitcoin has been spectacular, but it's really much more about the paper printing of the other countries. Since these digital currencies have landed in the marketplace, if you take a look, they're limited in the supply that they can issue. However, the G20 countries have been printing money at an incredible rate, and their balance sheets have been with buying back their own bonds. I mean, they're the biggest buyer of their own bonds, and it's been brilliant to see what the Swiss have done. And the Japanese, they've been issuing this money at zero interest rates, and they turn around and take money. They create printing money themselves, and they go buy their own stocks. So the biggest shareholders in Japan, South Korea, I believe, and also in Switzerland are the central banks. It's unheard of because they recognize that this cheap money has to buy real assets. So I think that the phenomena of these digital currencies is more a reflection of the lack of confidence in governments that are just printing money, sort of a silly behavior. And I think that the gold market is going to have its point where it just spikes to another level. So I feel very positive regarding gold.
Well, we'll leave it there. That's fantastic stuff as usual, Frank. We appreciate your insights, and it's always great to hear your thoughts, and we really appreciate your time once again. Now, before we let you go, please tell listeners a little bit more about your firm and your services, and then also plug the wonderful Frank Talk blog, if you would, because this is an absolute must-read for anyone listening to this podcast.
You're so kind. I thank you very much. It's usfunds.com. It's so simple, usfunds.com. Subscribe to Frank Talk and Investor Alert. It's won many awards when we go up for competition in the fund world against Fidelities and the Vanguards, which most people know of. And it's written by portfolio managers. It's edited by journalists that are internal. We're very proud of what we create. And it helps us. It helps me that I'm traveling around the world to relate to investors what I'm seeing and what I think some of the economic benefits are and risks are, because we always believe at U.S. Global and in all of our prospectus that government policies are a precursor to change, and it's important to recognize what those policies are. So with that, just go to usfunds.com. Love to see you become subscribers, and if you have any ideas or thoughts, please feel free to send them in to us.
Well, excellent stuff. Thanks as always for your time, Frank. Congratulations on the launch of the Go Gold and Precious Metals Miners ETF. Continued success there, and keep up the good work with those great market commentaries. I hope you enjoy the rest of your summer, and I look forward to catching up with you again sometime in the fall. Take care.
Take care.
Well, that will do it for this week. Thanks again to Frank Holmes, CEO of U.S. Global Investors and manager of the new GoAUX Gold Fund. For more information, the site is usfunds.com. Be sure to check out the previously mentioned Frank Talk blog while you're there for some of the best market commentary you will find anywhere on gold and other related topics. Again, you can find all that at usfunds.com, and you can also go to goauetf.com for more information on that new gold fund. And check back here next Friday for our next weekly Market Wrap podcast. Until then, this has been Mike Leeson with Money Metals Exchange. Thanks for listening, and have a great weekend, everybody.
Thank you for joining us for this week's Money Metals podcast. Be sure to come back next week. And don't forget to subscribe to our podcast through iTunes for answers to all of your questions, or to discreetly and securely buy or sell gold or silver coins, bars, and rounds. Call 1-800-800-1865 or visit www.moneymetals.com. Our knowledgeable and no-pressure specialists are standing by between 7 a.m. and 5:30 p.m. Mountain Time, Monday through Friday. Or you can lock in your order online, 24 hours a day, 7 days a week. Again, visit us at www.moneymetals.com or call 1-800-800-1865.